The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here. This is Wednesday, first trading day of the year, January the 2nd. And thanks for a great 2 hours between Steve and Tom earlier on. And, of course, straight after me comes Larry Pesavento. And so Larry, then comes Daryl Martin. It's Wednesday, so you get Dave White and then Ken Shreve. And then back home right here with Tom O'Brien wrapping up the day, giving his commentary, great analysis, 2 o'clock to 4 o'clock. And right off the bat, I got to thank everyone so much. I appreciate, and I will diligently do whatever I can to assist in for those of you who purchased my CD and got my newsletter for free for the month, just an overwhelming response, and I respect that, and I'm going to treat that with alacrity, and certainly I want to be able to demonstrate that the ChapmanWave is a technique that is a waveform that never sleeps, and I will just do my very best to illustrate it as I did today. I gave a very comprehensive look for the many new subscribers. I explained how I use the Trader's Corner, what we do, and what we're looking at, why we're looking at it, and what I'm expecting, anticipation, and I also teach the way the waveform works. This is a very interesting day because we've got essentially a single leg A straight up from from Monday. One of the reasons why I always say I am going to wait, and we certainly learned that lesson, I believe it was June. Let me just go back here and see. September, was it June? June. Yes, in June, almost towards the last day of the month, it looked like June was going to close underneath the 9-period moving average in the monthly chart. Instead, it spiraled higher, went above the 9-period moving average, and we have not closed under that moving average since then. I also discussed in the ChapmanWave Peak F, the 6th highest peak from the lowest, most identifiable low. In this case, it's the low of March of 2009 at 64.69. That would be the level that started off this big move. Up until now, what we've seen are 6 successively higher peaks. That essentially should take us to the level that I call a peak F. Alphabetically, it goes peak A, B, C, D, and then E and F. What happens at D is very important because you could recycle. And as long as certain aspects of the chart formation or the moving averages or the waveform itself or the smaller time frames are working, so I do not want to do anything until the bar is complete. It is really tough to do. But if you're looking at a 1-minute chart, wait. I go through this in my Master Trader series. I think, wait. Have the patience to wait. I know it can cost you. You've got to have your stops in place, etc. But at the same time, wait for the bar to complete, because at that point, you will have a better idea of what that completed bar is telling you, so that the very next bar can confirm it, either by making a peak or continuing the move up or down, etc. Well, I've been discussing this for a while. And what I said is that I'm looking at the slow stochastic in the Dow monthly chart as holding very well in the 80% higher and higher area, and the MACD, although it turned negative, is flattening out. And basically what it does is it keeps the last signal in place until there is a change of signal. Well, in this particular instance, I've got alternate wave count F/B for the last peak at 13,661. I'd said that if the Dow closes, it didn't look like it was going to, certainly on Thursday, but definitely early Friday when it opened down like that, I said I'm waiting for the close today, because if there's a close above the 9-period exponential moving average, there is a chance that we could continue higher in the first quarter to go to a leg C above 13,661. It'll be G/C, but I have to give the benefit of the doubt to a peak C, saying there should still be a leg D to the upside. Now, I also discussed the three bears, VIXY, Bondi, and Dolly. That is the VIX, the volatility index. Now, the volatility index had, in fact, made a peak D on the 28th at 23.23 in the 120-minute chart. We're watching it, my subscribers know we're watching it closely to see how it would pull back. And at the same time, the Dow 120-minute chart went to a trough E just below the left side support level in a left side, right side price time match. Also, I had an indication from some days ago that 12.28 high in the Trin, it's called the Richard Arms Trin Index, was a suggestion that there was an overbought situation, a really big overbought situation. Remember, that was that Thursday night, when Thursday night the Dow dropped about 400-500 points in the futures, S&P about 40 points. And then when we opened down, but we just kept climbing all the way to a pretty decent close. Not great, but a pretty decent close. So I had to put that all together. Besides which, I said that gold was just finding a little bit of support was possible. I said to subscribers, it could bounce a little bit here. And the euro was still acting well. So now let me go through the numbers. The Dow's up 233 at 13,337, but it made a nominally new high at 13,377 above the previous high of 13,365. Is this leg G or is this brand new A/G? In the S&P, it went above the 1448 high. It went to 1457. Is this F/A? I'll talk about those in a moment. The short-term trading index gave a signal on Friday. I keep thinking it's Friday. It was on Monday, to say that there should be a pullback to a minus, even if it's -1, but there should be a pullback in the Dow. Well, you can't fight something that goes on overnight like we had in the political arena. And we've seen it before where the Dow has been up 200-something points, 250, 260 points, and then intraday it's plummeted down to a +50. It never went negative. I would say that would be a successful indication of the ChapmanWave trend gauge. I don't count that. It did not go negative. If it did not go negative, it doesn't get counted. And if it doesn't get counted, all I can say is we have to be diligent and say it's a miss. That's number one. Number two is there is a second reading today that says we should have some kind of a pullback tomorrow. So that's the way it stands right now. Now, this is a political force, but it is the commentary of the market. Remember, I say you can look at all sorts of things, Fibonacci, ChapmanWave, volume, on-balance volume, Gartley's, butterflies. I don't care what you look at. Price is the arbiter of trend. And at this particular point, having made new recovery highs, seeing the IWM, I'm going to go back to the monthly chart in a moment, but let me just do this because it's all part of the potpourri of what we're looking at. The IWM went to a new recovery high today in leg D. It gapped up. Remember, I had that count that I said is a possible phantom peak back on the 27th of November and the 28th at 81.23 and 81.31. I said it's not possible to no, I'm sorry, it wasn't that one. It was 82.41, the two parallel highs on the 29th and 30th of November. I said I keep that there because it allows me to be a little ahead of the game. Well, that is now a peak C that goes to leg D, gap up to a D. Got to watch that real closely. But the weekly chart has the pattern that I call the falling axe. In my CD introducing the ChapmanWave methodology, which thank you so much for. I can't even tell you how many people signed up for it. That is fantastic. There is a pattern that I call the falling axe. I always give these nicknames. It just seems to be a way for everybody to know that we're on the same page. We're looking at the same thing. This is chapter 24. And basically what it describes is a pattern that has a look of a long handle, and then the blade of an axe, it expands. But if you're pointing it down, it's pointing down. That can be a very powerful breakout move. Well, what we just saw in the weekly chart of the IWM is the one-to-one confirmation of the breakout. This is what I explained in the CD introducing the ChapmanWave methodology. So all of a sudden what we've got is Gray Peak A was the week of the 21st of December. But this new move up is either leg D of the old move or leg B of the new move. So either way, it's saying, if the stochastic, which is 71%, is able in the next week to break above 80%, that's going to be very positive, because then all of a sudden there's a pattern in the monthly chart that says if it breaks above 86.96, and right now it's at 86.61, that would be an all-time high. But the 85.20 going all the way back to 2007 peak D high. Look at the way these ChapmanWave moves are. Look at this. The IWM, a monthly chart, not even a daily, goes from the trough of October of 2002 to peak ABCD, pulls back. That's D on the December of 2004. What is that? That's 8 years ago. Pulls back. Just one leg down. On the 4th of April of 2005, starts a brand new move that goes to peak ABCD at 85.20, plummets down to a trough F at 34.26. I should sing the song. I won't sing the song, the ChapmanWave song. Then it goes from 34.26, the low of March of 2009, to peak ABC, makes a breakout cup and ladle move, and it goes all the way to peak D at 86.82. May of 2011. You know, these Mays and Octobers and Marches have been really important. So now look what happens. It pulls back to where? It pulls back to October of 2011 to 60.09, starts a brand new move that goes on the 200-period exponential moving average. Right there, exactly. It starts a brand new move that goes peak A, gray A, because it didn't break above 86.82. And as long as it hasn't broken below the trough that started the move, that would be the 34.26 low of March of 2009, any breakout to a new high, which it did at 86.96, has to have a parallel wave count. So it brings in the old count of D, so it goes to an E, but it brings in the new one as well, slash B. I'm waving my arms, you can't see that. If it goes to 86.97, 1 penny above in the monthly chart, I don't care if it's a monthly chart, 1 penny above starts F/C. If the stochastic manages to hold at 84 or higher percent, it's at 84 right now in the monthly chart, that is very positive. So now let's put that together with other things that we're looking at. The monthly chart of the Dow has just begun. This is the first hour and a half or 2 hours of the new month of the new year. So now we're going to look at the EUR-USD, and one of the reasons I was talking about gold a moment ago, we're going to talk about that. We're going to talk about the euro, which is pulled back sharply from the intraday, a high, and we're going to talk about the USD JPY, bonds, and the VIX. I've got a beautiful chart to show. I'll be back. Basil Chapman, 877-927-6648.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, Friday, 11 o'clock until noon. And I had a couple of questions. Number one, I want you to go to the VIX index. We'll go through these one at a time because it's the start of the new month, start of the new year, start of the new the new trading day, the first trading day of the year. So let's do this. The volatility index in the daily chart went to a peak D in the 120-minute chart and the daily. It made a beautiful left side, right side price time match attempt to get to the 24.93 high, not the high of 27.73 of the 4th of June, but the one lower than that, 24.93, back on, on the 13th of June. And it just failed. It went to 23.23. That was peak D, and then on Friday it just turned around, confirmed that peak D, and today it's plummeted down to a low of 15.21. Stochastic's down at 65%. It's still quite high actually, but it's at 65%. And the MACD has made a sharp reversal, but it hasn't crossed negative. So now let's look at something else. The weekly chart is, so remember, if you're new to TFNN, you're looking at my charts, then what you'll be looking at is the left side here is always the daily chart. This is with the black background. The weekly chart is the middle. Monthly chart is on the right, and then I usually grab the 120-minute chart to pick it up. So in this particular instance, look at what's happened. I've been talking about, I don't know how long I've been talking about this, but I've been saying that if the public recognizes that there's going to be a financial any kind of crisis, by the time they realize it, being fed all the time by the media, and all the media is doing is trying to sell, be the first on the block to sell their newspaper, to sell their whatever medium it is. Remember, they're in the business of selling. They're not really in the business of news. Don't kid yourself ever that they're in the business of news. They're in the business of scoops. They're in the business of trying to outsmart the other networks. And you are just a peripheral entity. You're just merely not the resource, but the source that they're going to try to, and it's SAUCE that I'm talking about. You're just the stuff that gets put on the spaghetti. And you've got to keep that in mind. And what I've been saying is, I've been here for 43 years. I've been looking at news for as long as I can remember, since I was a little kid. I just cannot recall ever that the media has identified a crisis ahead of time, or a politician who's even worse than the media, and correctly been able to put it out to the public and be right on top of the issue and stay on the issue all the way through to the end of that crisis of the issue, if there is an end to the crisis. Never happens. It's like, I was talking about the politicians. They sit in the caboose of the train. They watch to see which way the smoke is blowing. When it stops at the station, Bill Clinton was an absolute expert at this. They jump to the front of the train. They get off and they say, the smoke is blowing that way. Never wrong, because they're right. They're looking at hindsight. And this is what we've got to do. We've got to say, what the heck's going on here? Look at these. Look at the crisis, the bank crisis of October of 2008. The VIX goes to 89.53. That's selling pressure, buying pressure. Yeah, they call it fear and greed. In this case, it really was fear. But normally, I just want to call it what it is. It's selling pressure, buying pressure. In this case, it was selling market pressure, which is buying the index, the fear factor, or the buying pressure of the volatility index, soars to a peak D at 89.53, plummets down to 15.7, has a single leg spike. I call it the Eiffel Tower, ChapmanWave Eiffel Tower formation. We're going to get to that in a moment. That's the Greece crisis. And then it pulls back to 1427, another big spike. That was the Spanish crisis in March of 2011. All of a sudden it pulls back. And then what happens? S&P downgrades with the budget crisis. Oh, that downgrade coincided right there in August of 2011 at 48 round number high. It couldn't get there. It went to 46.88 with the retest at October of 2011. Peak A minus. Peak A minus, lots of A minuses. That's what happens in the volatility index quite often. What happens? It plummets down to 1366 with another Greek crisis incident of June of 2012. Wait a minute, at 2773. It pulls back. It goes to 13.30. Just August, 13.30. It wends its way, or winds its way. I like to say wends, but many people like to say winds its way. Or it tries to get above the 9-period exponential moving average, that white line. But this is the clue to me all the time. You see the flat stochastic? That's saying there is no torque. There is no buying power there. See the flat MACD doesn't cross positive? This is the fiscal crisis. Fiscal cliff. I've been Googling, trying to find out how many times the word fiscal cliff. I have to get that one of these days. I have to be able to. I want the numbers of times crises are mentioned. If I get a peak F in that, that's the end of the crisis. Well, the fiscal cliff only went to 23.23 on the VIX, and now it's down to 15.91. I'll be back. Basil Chapman, right back.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi folks, Basil Chapman. Just before I get to the other technical aspects of the market and what we're looking at, and I do believe that there's a chance that gold could bounce a little bit here with the market. I'm going to talk about the bigger picture in a moment, but let me just do, on Monday, I didn't have a chance to get to in the den. We have Elvis, and Elvis wanted to know about 2 stocks, SWHC and RGR. I'll do them right now. What I had said at the time was I texted him, or I IM'd him to say in the den to say, I don't think there's very much here. There could be a bounce, but be careful. So RGR made a peak F top in the daily. That's the Ruger. This is the gun manufacturer and ammunition. 55.61 back on the 30th of November. It plunged down to 40, round number 40 low on the 200 period exponential moving average, and then it bounced. But the weekly chart was saying, hey, be careful here. It's made the double top formation that I call the drop bucket formation. It's a double top it's not exactly a cup formation, but it has exactly the same features. And if it pulls back more than a third to a half of the way down from the previous high, and that would be 58.42 last time, 53.92. What am I doing here? 53.92. 53.92. That was the peak F top in the weekly chart in May, the week of the 4th of May, and then it pulled back to that 30 level. Then it's bounced, and it bounced to 55.61. Now the 9-period moving average starts to become a resistance level, and if it closes under 40, that's the round number 40 low of the week of the 21st of December, 3 weeks ago. I would have to say to you, be careful, because then this could come back very sharply. I have in the monthly chart, the technicals are weakening a lot. It made a peak F, and then it went to a peak G/C. I'm calling it probably a G for now, but on a monthly basis, I need to see a close below 40, and then it pulls back even sharper. That's that one. So, yeah, it could bounce, but I would stay away. Of course, I don't even want to get into that horrible, horrible scenario of the shooting. I'm just talking about, I'm doing a technical analysis. That's what I'm looking at. Sometimes you just have no choice but to separate one thing from the other. In this particular instance, I'm looking at the daily chart of Smith & Wesson. Same thing. Smith & Wesson holding core. The other one was RGR. This is SWHC at 8.62, up 18 cents. Well, that made the same kind of double top that I always look for. And this is the pattern that I talk about in the ChapmanWave. It's called, I call it the double top formation. And more importantly, this is chapter 22. I just want to show you what it looks like and the context that I look at it in. And it's the pattern that rallies sharply and then it makes a top. But basically, you've got resistance on the left side. You've got the cup formation that doesn't break out on the top, doesn't hold any breakout, pulls back, and then it breaks below the third to halfway from the lip of the previous high to the cup bottom. If that happens, then you've got to be careful. That's exactly what happened here. It went to this peak, slightly higher high at 11.25 on the 7th of December at peak E/C minus, pulls back sharply. You see how the technicals were failing terribly? So I would, even though it's rallying here, my guess is just in a trading range. It's had a strong move from the 11s down to the 7s. And my suspicion is based on the weekly chart that it's got a cup formation forming. Technicals are still very weak. And that if SWHC takes out 767, you got to be careful because it's going to quickly test 740, which is really important, the low of the 17th of August. In both cases, any rally I suspect will be kind of curtailed to the upside. But if I'm wrong, then SWHC will turn the 9-period moving average in the weekly of $9.07 into some kind of support. Now, the monthly chart made a peak C. Now, in the ChapmanWave, what you always look for is a peak D. So this has gone to a peak C at 11.21. We would expect 11.22 or higher to start leg D. It went to 11.25, so that's your leg D. And now it's if there's no new high this month, it gives it a peak D. And I wouldn't be surprised if it's going to be real tough for this stock to rally much further without more of a consolidation. It has to get out of the news, and then it can start another rally. So that's that. Now we have to go to. I've spoken about the Dow. I was asked, I had an email about IWM, and I spoke about it. I can't remember now if I discussed the weekly. Yeah, I discussed the weekly, which is in leg D/B. D says you've got to be a little careful. B would be very bullish. So the week has barely begun. All I'm saying is it's broken out to a new recovery high. That's very important. If it really takes out on a monthly basis, it takes out the 86 as resistance, and it powers into the 8780 to 8850 area. That I just have to consider that's very important. So you've got the VIX pulling back to the 15s. You've got the TLT slumping down to a new recovery low. We can't call them recovery low, to a new low in the daily chart with that H formation of 119.90 being taken out today at 119.41. And the technicals are still very weak. So that's another sign to say, be careful about being short in this market unless you're stock selective or sector selective within the overall picture. My concern here for the weekly chart is that it's taken out the uptrend support line. It's breaking down. I don't see too much support for this until it tests. Well, if it takes out 119, this week closes at 119. You can see 116 to 115 quite quickly. And then that alternate count that I've got in the monthly chart says we have probably made that peak D. Although the question is still out. Everything about it says that we probably made a peak D at 132.21, even though there was a fractional 23 or 26 cent lower low in April of 2010 from this, what I call the starting point of 87.56 back in June. If that's a peak D, bonds are going to be pulling back and the market will benefit. Now, I'm going to quickly talk about something, question about IYT in the den. IYT. Yes, IYT is a real good example of a pattern that I often talk about. It's that falling axe that I spoke about just a short while ago that I saw in the IWM. Well, this is leg E/A in the daily chart. Right now, I just have to call it E for the moment. But the IYT, which is the transportation iShares ETF at 96.38, up 2.03, up 2.2%, is walking the 9-period moving average. You see the blue line? And that's really important. What is the wave count? For now, this is going to be a tough one. For now, I'm just going to call it E/B. So there we go. E meaning you got to be real careful. B meaning, whoa, any pullback you got to buy. But the stochastics at 86% and MACD is expanding. I like what I see. I like the symmetrical triangle being broken to the upside and a test that is successful of breaking above the previous arch high of 96.22 today at 97.16 is broken it, even if it doesn't close above it. So that's really important. Makes the support at 93.5 to 92.5 really important in this particular instance for the IYT. Now, we've got a couple of questions. Yep, we've got George in New York. Hi, George. How are you?
Basil, good morning. Happy New Year. Happy, healthy, and prosperous.
Same to you.
All the tigers, tigeresses out there. And I have to say, TFNN is an excellent business model for the swing traders and investors alike out there. It's a very good business model.
Thank you very much,
kudos to Tom
George.
and everybody there.
Thank you, George. I echo the entire sentiment. Thank you so much.
Yeah, at least we get to share all different ideas from everybody.
Exactly right.
And with that said, I wanted to open up the new year with a general question about commodities. Where do you see copper, oil going? Because, again, on a larger picture, of course, I'm looking, of course, at equities. So I'm debating, like, on the commodity market for oil stocks, of course, copper such as Freeport, U.S. Steel Dynamics. So ideas like that in some cyclical companies, of course, like Manitowoc. So
one of your favorites, yes.
Yes.
So, okay, let's do this. And thank you, George, for all those comments. We all really appreciate it. I am looking, let's go through them one at a time. If you don't mind, I'm just going to quickly go to, although Larry Pesavento is the expert here, I'm just going to quickly do a couple of charts in the way I see it. The euro right at this particular moment is making 1.32991, making a potential little double top. Says, okay, I've had a great run. I'm getting close to the 200-period moving average in the weekly chart, and the weekly chart has that at 1.3354. We've gotten close. I'm making a high-level consolidation. 1.3066 is going to be the strong support. Monthly chart is not a great chart, but on a shorter-term basis, looking at it on a period from the low bar of July of this year, I would say that the euro looks as if it wants to test the 1.3354 area to make leg D. The moment it goes above 1.33076, this is the euro dollar currency pair, that starts leg D up, and that's where you got to be a little bit cautious. So I think it's very close to how can I put it? It's very close to the upper range, but it also has a lot of security at between 1.30 and 1.292 on the lower range. So maybe a high-level consolidation. The USD JPY, which is the US dollar Japanese yen currency pair, is in very strong leg E in the daily, really close to some kind of consolidation on a shorter term basis. Made a cup and ladle ChapmanWave breakout in the 120-minute chart, which makes it A, B, I wonder if that's C. Yeah, C, and it needs one more peak above 87.325 to make leg D, and then I think it too is going to have a little bit of a consolidation. The weekly chart broke up in leg D, broke above the previous high in the capulator formation in the weekly as well, and that usually goes to D. That's where you're going to watch for a pullback, and it's above the 200-period moving average, so I would say between 87.80 and 88.70, that's the resistance, and tremendous support between 85.10 and 83.60 is 83.20 on a shorter-term basis. Weekly, actually, monthly looks very good. So now I can go to the other things that I can talk. I spoke about USH. I spoke about the TLT. I'll just put that in the context of bonds making a leg D, which could make a trough D. The week it doesn't look so good here. US. Okay, this is what I want to look at. The monthly is what's very important. I have alternate count. I have a peak E/C, but the Fed has said that they want to keep it. They want to keep it lower. The interest rates lower. So my suspicion is that, I'm going to put this in the context of the big picture, is that the dollar keeps getting smacked on the head because although you would think it's rallying, it's just merely forming the pattern that I call the dreaded H goes to a lowercase m formation, and that M formation at some point very often tests the low, which would be 72.70. It's at 79.74. This is a monthly chart. But if it walks the 9-period moving average and is able to take out the left side arch high, in this case it's that high of 88.71, that's great, because now it could start to, that means it has to break the 200-period moving average at 86.57. If it does that, it says, now the dollar's broken a little bit freer, and it could move higher. My suspicion is that only when it breaks decisively into the 84-ish area at some point this year, if it does that, that's when the market is going to be really taking it on the chin. That's when the VIX will be rallying. So the Fed has said for months, years, not months, years, every time it pops up, it's whack-a-mole, bam, 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 and you can see it in the chart. And in fact, the dollar looks very much like the USO, the crude oil chart, just making a series of arch formations within a trading range. So I can forget about those two. They're just in trading ranges. Most importantly, what I'm looking at is high-grade copper. So H13, let's see what I've done on this one. Yes, that's just broken out on the daily basis. The weekly is making that symmetrical triangle. That means the equal decline, degree incline and decline, and it's trying to take out the left side high, which would be peak A, B. If the continuous contract goes above 3.848, it starts leg C. But it's failed. It's failed before in leg C. So I've got to be a little bit careful about that. But I love the fact that the copper is actually responding. Now, the monthly chart turns out in commodity, we're talking commodity now, the monthly chart turns out to be having the same kind of H to M pattern. So it says to me, crude oil is also in a trading range. So now we can go to other things. If we look at some important commodities, now I hope I've got it on this particular chart notated. Corn. This is the corn continuous contract. No, I haven't got it. Let me go back to the black charts. Yeah. So the corn continuous at C.P. Oh, man, I lost all my notation. Oh, George, I'll be back because this is going to be very interesting. Because it's a good question, because we also want to look at gold and silver. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, Then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We're on with George in New York. Dow's up 226. S&P's up 2482. And a couple of things that I wanted to talk about. So, George, let me do this because we've got callers waiting. So I'm going to do this. Let's look at I'm going to notate my soft commodities, and I'll have it done. But I'm sure that Larry will be able to talk about it in great detail. But my chart says that they are stuck. Some of them are stuck right now in a trading range. But the SLV has the monthly chart, that's the silver iShares. I still have it on a sell signal. I still see that it could bounce a little bit, but the technicals in the monthly chart are still very weak. If it does break above 3150, it can go a little bit higher. My suspicion is that silver is in a downtrend, just as the GLD, the gold is in a downtrend, but the GLD is holding way better and is in an H that goes to an M formation in the monthly chart, and it's really just in a trading range. And I mentioned the other day, there could be a bounce in gold. Yeah, I think this bounce could take the GLD maybe to the 164.5, 160, 620 area, and then I think it starts to pull back. So I think limited upside, and then it pulls back. But you know what? If you have a chance and you're able to call me tomorrow, I'll have the other. I'll look at the picture in terms of commodities and in greater detail with the copper for tomorrow. So if you don't mind calling me back, I'd really appreciate it.
And that's given me clarity. Thanks.
Thank you very much. Thank you, George. Let's go to Mike in Lakeland. Hi, George. I'm Mike. How are you?
Hey, happy New Year, Basil. I want to thank you. You gave me some great tips on how to handle that eye surge, and I got that put down at 480 before all this. So thank you. That worked out really nice.
Fabulous.
I have another one that I think is juicy. I hope you do too, but I want to get your thoughts. I purchased this morning the January 19 put on Priceline, the 635 put, PCLN, and I think it looks bearish, but I want to get your thoughts.
Okay, chart formations repeat over and over. I've just shown examples of these patterns. In the ChapmanWave methodology is the pattern that I call the H formation. Now, folks, the H formation basically looks like a lowercase h, and that H formation says that the pattern could give you these arch left side, right side tests, and when they break down, they can keep going lower and lower. But at some point, it makes the M formation, lowercase M formation, like slide 336 of my CD shows exactly. So now what we're looking at, that price line, I believe it's made a peak F top at 774.96 in my ChapmanWave methodology in the monthly chart, giving it the good chance of a hat-trick top, which it's kind of already shown it's capable of doing. That is, pulling back, having bounces, but making lower highs and lower lows up until recently, and it went above the 649.30 arch high of a couple of months ago, back in July, August, and it's gone to 879.23. But here's what I think you've got. I think you've got your eye on the right thing. I think you have a really good chance of being successful here. These are the parameters that I would look for. So you've started a position, correct? And that's what month?
The January 19th.
So January 19th, and you've got 3 weeks to go because it's Friday. 2.5 weeks to go. So, okay, this is what I'd be looking at. The resistance at 649.99 on the daily, that gap down, has a resistance at the top of 650, 665. Now, because you don't even want to be talking about the 650s at this particular point. No. The fact that it's responded so well today and on Friday, it tells you you're kind of a market vulnerable until it hits its own resistance. That resistance should come in at about 630. I would put it at about so it's at 629.09. It's pulled back from the high of 641. 643 to 645. You know what? I'm going to say you've already got your position. Let me do a little bit of homework on this because I've had my eye on price line as well as a potential short later on. And tomorrow I will talk about price line as I will talk about the commodities. And thanks so much for your input and thank you for calling. That's Mike in Lakeland. Stay tuned for Larry Pesavento, Basil Chapman. Don't forget, this is the start of a brand new year.